Today in this video, we are going to talk about Wilder's RSI strategy, especially used by the professionals and the algo traders. It's a momentum indicator that measures the speed and the change of price movements. It's undoubtedly the first momentum indicator any novice would explore, and start having them on their charts while they initiate their trades. RSI provides technical traders with signals about bullish and bearish price momentum. It is often plotted beneath the graph of an asset's price. The RSI oscillates between 0 and 100. Now, let us get straight into the strategy. As we progress, please ensure that you like, subscribe and press the bell icon for all the upcoming strategies in this channel. We will maintain the RSI setting to be 40 and 60. Anything above 60 RSI levels, we will treat this to be a buying opportunity. Anything below 40 RSI levels, we will treat this to be a selling opportunity. Anything between 40 and 60 RSI levels is a no trading zone. First, we will see the bullish strategy for buying opportunities and go through few examples as well. Here we see a plain candlestick chart with RSI 40, 60 plotted. We are looking for a buying opportunity. This means RSI crossing 60 levels. The candle that crosses the 60 RSI levels is called a markup candle. Markup candle is nothing but the candle that denotes a huge buying pressure and the momentum is very strong. As soon as the markup candle is closed and RSI sustains above the 60 RSI levels, you can enter a buy position on the high of the markup candle. Here you see the force, how the price was pushed hard. And this has gone almost 8 times of the markup candle. So, the reward was very high. Why are RSI 60 levels so important? Now here you see that the RSI tried to go above 60 RSI levels, but the momentum was not that strong. Though the markup candle was formed, the next candle didn't break the high of the markup candle. And hence, both the price and RSI were pushed down. 60 RSI levels are the potential zone where both buyers and sellers will have a huge tug of war, and the output derives the direction of the price. This is the importance of 60 RSI levels and the markup candle strength. Now let's us go through an example on the USD CAD chart. You can now see that the RSI is drifting upwards by showing the momentum. As soon as the 60 RSI levels was crossed, the price showed a huge rally. So if you would have entered above the high of the markup candle, you would have been rewarded almost 8 times of the entry price. Let us go through the second example on the EUR/USD chart. You can now see that the RSI is drifting upwards by showing the momentum. As soon as the 60 RSI levels were crossed, the price showed a huge rally. So if you would have entered above the high of the markup candle, you would have been rewarded almost 8 times the entry price. Let's see the third example on the EUR/JPY chart. You can now see that the RSI is drifting upwards by showing the momentum. As soon as the 60 RSI levels were crossed, the price showed a huge rally. So if you would have entered above the high of the markup candle, you would have been rewarded almost 8 times the entry price. Now we shall see the inverse of the same strategy for the bearish entries, or we call it shorting opportunity. We see the RSI reaching 40 levels, and we notice that the RSI is also showing great momentum on the downtrend. This is where we get ready for our strategy. The first candle that takes out the 40 RSI levels is our markdown candle. We only need to observe that while the candle is being closed, the RSI sustains below 40 levels. If yes, then we enter our trade below the markdown candle as the strategy confirms. You will observe that, after the 40 RSI levels, the price had sharply drifted down and almost 10 times the reward from our entry point. Let us go through few examples to review the shorting opportunity with this strategy. We see the EUR/USD chart where the RSI is gradually moving towards 40, and this RSI momentum shows great strength. So as per our strategy, as soon as the RSI crosses below 40 levels, we enter the trade on the low of our markdown candle. You can see how sharply the price fell down and we were rewarded 8 times from our entry price. Another example for bearish entry. Now we see the EUR/JPY chart where the RSI is gradually moving towards 40, and this RSI momentum shows great strength. So as per our strategy, as soon as the RSI crosses below 40 levels, We enter the trade on the low of our markdown candle. You can see how sharply the price fell down, and we were rewarded 5 times from our entry price. So what's next? We need a stop loss for this strategy. In case of bullish entry, slight below the markup candle is where we place our stop loss. The reason behind, markup candle had a lot of strength, and after a huge tug of war, buyers were in the position and they took the markets up. In case of bearish entry, slightly above the markdown candle is where we place our stop loss. The reason behind, markdown candle had a lot of strength, and after a huge tug of war, sellers were in the position and they pushed the price downwards. Few key takeaways from this strategy. RSI levels 40 and 60 are potential areas and a very decisive zone for both buyers and sellers where the decision for the price movement is made. Markup and markdown candles have great strength because the open price and the close price are formed based on a tug of war between the bears and the bulls. This strategy works in any time frame. You can use it as low on 1-minute chart and to high of monthly chart. This will give you best results if used correctly. You can make use of this strategy in any scripts on the candle charts, be it forex, futures, options and equities. I recommend to club this with your existing strategy or use it with price action, and this strategy works like a charm. I hope this strategy is going to help you in all your upcoming trades. It's a powerful strategy. Kindly do some backtesting to gain confidence in this strategy, and we wish you all the best for your trades. Thank you.